I've got to manage myself, I've got to manage my mind. The task is not easy, but to high heights I climb.
I'm determined to succeed, so no excuses, please. If you don't want success in life, then don't hinder me. Yes, let the whole world know you are a CEO. You are a CEO. I'm a CEO. You are a CEO. I'm a CEO. The time is here to celebrate. You are a CEO. You are a CEO. You are a CEO. You are a CEO. Yes, let the whole world know. The time is here to celebrate. Success is calling, so don't be late. You are a CEO.
Hello everyone, Michael Lee Parker, and we are here in studio at CEO TV Live, and I want to welcome you to another show here at You Are a CEO. Tonight, we're jumping right back in. We've been talking about Money CEO, and yes, this is part 4 of Money CEO, and we're going to go even deeper into this topic, and so I'm so happy we've made it to part 4. Now, tonight, we're going to hone in on some specific things. Now, as you know, we've been talking about the breakthrough financial management app, Money CEO, that's going to be coming to you very soon. And so as you can see there on the screen, we're going to have a breakthrough solution, a breakthrough product, something that you can have and use as a service to you every single day to manage your money the right way. Now, I want to remind you of some words we talked about. We talked about the word awareness, right? We talked about how important it is that you know where your money is, you know what your bills are, you know what's happening, right? So this was a critical word. Then we talked about planning, and we went over certain things regarding planning, how we have to have a plan. We have to have some sense of organization to what we're doing every month, every day. Then we talked about direction, and this was important, where there are certain rules of the game we talked about and how those rules are played, so we have direction of where are we trying to go with our money. Tonight, we're going to add a 4th word, and that 4th word is the word security, all right? Security. So when you think about the word security, the root word in there is secure, to feel safe. Now, I want you to consider, when you just let that word hit you in the face for a minute, when you think about security, you think about everything is protected. Everything is provided for. So thinking about this word security, I want to also have you go a little bit deeper to the word financial security, okay? So as you see the imagery here, we're all looking for where do we turn to get financial security? We'll get off this road of life if we could find a way to be financially secure. We're all in this race, going back and forth, trying to do this and do that financially, but we're looking for an exit. We're looking for an off-road, somewhere to go where we can finally get to that point where we don't have to worry as much about money. And this is, again, why we're all looking for that. So when you consider that, though, when you think about this money bag, all right, I want you to get a good look at that. When you think about this money bag, all those words you see in there, there's so many things that money means to different people. Significance, stability, reward, relief, value, status, comfort, power. There's so many words in there. And this is an interesting truth, but it's also a scary truth, because something so important as money, there's so many different definitions of what it means. And many people want it for different reasons. And as a result, there's different ways people approach it. And because we were never really taught about money, I want you to think about that for a minute. It was where in our whole education system where we taught about money. You know, I'll wait for you. There's not an answer you're going to really have, right? wasn't in kindergarten, wasn't in elementary school, definitely wasn't in junior high or middle school, wasn't in high school. I would beg to say it wasn't even in college. And I have a master's degree in business, right? Where do you learn about personal money management? And so this is a big problem. And I want to tell you a secret. And this is not, a conspiracy or anything, but I want you to understand the people who made the rules of society were the wealthy. And the wealthy made those rules from the mindset of wealth. So from that mindset, they were making rules to tell the people how to work within something that they were putting together. They weren't making those rules to govern their behavior. They were making their rule to govern everyone else's behavior, to work within the structures that would keep the society going, and thus keeping them wealthy. So you have to keep that in mind. And that's why it's so important to understand, because a lot of times our education system is really teaching us how to be a worker, how to work hard for a living, right? How to do our best, go and get a degree and work hard. That's what we've been taught. But the wealthy are not necessarily thinking that way. They're thinking about how to make their money work hard for them to create more money with little effort, right? Completely opposite of how everyday people think. And this is why this money bag with all these words on it is so important for you to understand. We've got to find out how to think differently about security. So let's go into another element here. When you just see money, you see Benjamin Franklin right there, you just feel a comfort, don't you? It just feels good to know there's money around. Something about money, it just makes you feel safe. You could be a bad person, a good person. You could be a person that's, don't have, certain things, don't live certain places. But if you know you got that money, it just makes you feel better, because you just know money can do many different things. Unfortunately, we live in a society where money matters, and how much money you have dictates what you can get, where you can go, and sometimes it can even be, something that you can use to try to pursue justice. But think about it. This is why so many people are trying to figure this thing out. How do I get more money, and how do I be secure? So when you think about this statement of the true source of financial security, the true source of it. Now, we know the root word in wealth is well, and we really, have to think about our own insecurities and think about that money shouldn't be our source of real, true internal security. But when it comes to our well-being and being able to provide for our families, there is a sense of financial security that we're looking for. And that true source of it, how do wealthy people think? How do you find the source of being financially secure? Very important question. So last but not least, when you think about this word wealth, there's so many elements to it, right? There's all kind of dialogue about the best way to handle wealth, about saving money, about analyzing the best way to get to that wealth. What type of plan should I have? How do I deal with taxes? All of these different things, when we think about wealth, there's just, a myriad of topics that you can go into. You go online, there's so many people trying to tell you how to become rich, how they did this in 5 days and got that, how they did this and achieved this, and then all this money came, right? But what is the truth about wealth? How do we need to measure ourselves when it comes to wealth? And I want to show you some things tonight that we're going to walk through in Money CEO to show you a different scorecard. So what we talked about in coaching in our last show was more of the standard things, the stability things that we should all have. Tonight, we're going to talk about some of the things that all of the wealthy people think about in their scorecard of what it really means to have financial security. At this time, we're going to jump into the Money CEO app, and just like that, I'm going to be right back here, phone in hand, and we're going to jump in. I want to show you this other element of Money CEO that's going to teach us all how to think like the wealthy. I'll be right back. Hello, everyone. I am back here in studio, and I have my Money CEO prototype ready to go, and let's jump in. So you remember we left off last time. We talked about coaching and we went over some of the things that you can see here. But if you notice the tab right next to it is wealth. And this is what we're going to be focusing on here today. So let's go over to the wealth tab. All right. Now we're in here with the big boys. We're in here with wealth, trying to think, what are the measurements of the game when we think about wealth? Well, one big area is net worth, okay? Now, net worth is something that a lot of times people don't think about their net worth. They think more about how much money they make. We think about how much money we have in the bank. We think about how big our paychecks are. But the wealthy think about net worth. When we think about net worth, we're looking at our total assets, and our assets are things that we have that have a value. So they're actually worth something, right? Like money in a bank account, investment accounts, the value of a home or a car, jewelry. These are all potentially assets. Liabilities are things that we are liable for, the people that we owe. So whether that's a loan on a car, a mortgage, or a person that you owe money, all of these are liabilities. So what this is doing is taking your assets minus your liabilities. So all the things I have of value that are worth money, subtracted by all the people I owe. And what is left is what you call net worth. Now, this is a good measure of how wealthy you are, because this means that you have, the amount of money you have after taking care of anything that you owe anyone, you have money left over. And this is what net worth is. So the net worth here is $125,000. So if I want to click that add button that you see right on the center kind of the screen there, if I click that add button, I could add something like, if you scroll up a little bit there, you can see that this is an asset, and I could classify it as an asset or a liability here. Let's say I have a Toyota Tacoma truck, when I purchased it, and how much it's worth. Say it's worth $18,000 something. And that could be a new asset that I want to add and save. So very important about assets. Now, there's some tricky subjects about assets, that the wealthy argue about, right? And some interesting things. But let's for a minute do a quick exercise. I'm going to go over to the whiteboard, and I want to show you a few things. So just hold tight. Let's go to the whiteboard. So I want to talk to you a little bit about a few things as it relates to assets, just using a pretty simple example. So when we think about an asset, we talked about the subject of, let's just use a house, right? And I have me a house, and let's say this house, wherever it may be, is worth $500,000, okay? So this is what it's worth. This is what the market will pay for it. And so this is the value, technically, is what normally you would show, traditionally as an asset. Now, let's say that there's a mortgage on this though, for $300,000 that I owe. So I owe $300,000. So this is actually, again, you can see, I'll use this. I owe $300,000. So what remains is $200,000, okay? So that $200,000 is really what I'm dealing with respect to net worth. So this is what is now the net worth. I shouldn't say the net worth, but this is what you call, with the house is concerned, equity, right? So I have equity in this house, and this equity is really kind of similar to what we're talking about with net worth. The difference between the value and then, of course, what I owe. And this is the equity I have in the home, the real worth of the property, right? But we're going to talk about this. So here is a discussion about assets. Okay, so I want as many things as possible that I own that have a value. Like I said, there could be many things, a car, jewelry, whatever. But I have to keep track of what I owe so that I can see the difference. All right, so we're going to go back for a minute. We're going to follow this example in just a minute, but let's go back to the app for a minute. So I want you to notice now, back on the application here in our prototype, the next area that we're covering is cash flow. Now, cash flow is really a very important element. So let's go over there. So here you can see this says my cash flow is $60,000. Now this is again looking at if this was a certain view, you know, if this person has a lot of money. But you can change the view on this, like what's my average cash flow over the last 3 months, over the last year, over the last, you know, this or that. You can always adjust that. But I want you to see here, let's just pretend we're looking at this for the year. And I can see my income. There's my normal income, which is income that I get from the work that I do. So let's say just normal work, my salary, anything from the work that I do as a contractor or an employee or a business owner. And then there's passive income, which we're going to get into a little bit later, that speaks to income that I have that is not from my daily work effort, okay? So, and then we have, in Money CEO, we separate need expenses and want expenses. And all of these expenses, let's say we list them out, and I can see how much of my money and expenses go to things I need versus things that I want, which you can see here, listed here. So this is one way of looking at your life, right? But at the bottom, there's a summary that I want you to notice. Let's zoom in on that. Total income minus total expenses. What I have left over is cash flow. So this is important, and I want you to notice the word flow, okay? Because when we think about flow, that denotes a river. It denotes something that's moving, right? An asset is something that is, you know, strong and stable, right? So, you know, but flow is something that's moving. So this person, let's say for the year, they have a positive cash flow of $60,000 every year. That is always positive. They always end up generating. This is how much they generate in a year. If this was monthly cash flow, it means they're generating $60,000 a month. And there are some people that do that and more because of how they've positioned themselves and the different opportunities they've been able to take advantage of. So cash flow is how cash, real cash, flows into my life and flows out of my life, and then what is left over, right? So the money that comes in, the money that goes out, cash flow is what I have left over that is positive, that now is coming into my bank account, real money. So let's go into cash flow a little bit more. I want to go back to the whiteboard again, and let's go back to the example here a little bit. So here is my primary residence, right, where I live. But let's say I have another house, and this house is a little different. This is my next house. This is a rental property, okay? And this rental property, without going into a whole lot of detail, this rental property, let's say that I bought this property, and this property, again, I have a mortgage on it that costs me $1,500 a month, okay? But I'm able to rent this property out for $2,500 a month, right? So again, I started off with the cost to me, but now I found a way to rent that out. And what I have left now, right, is a positive $1,000 per month. And where the flow happens is, if I look at every month, right, January, February, March, April, May, I'm sorry. And you look at this $1,000, and it's coming in every month. This is what we mean by flow. I have created a situation, so we can get fancy with the house and how I fixed it up and all that I did, but at the end of the day, I created a situation where $1,000 is coming to me and flowing to me every month, no matter what I do, right? So we're going to talk more about this, but this is cash flow. Now, this is where we get into the interesting discussion. And of course, many of you have heard of Robert Kiyosaki with his famous talk about cash flow. And he always gets into his 4 quadrants, isn't it? The employees, the small business owner, the big business, and the investor. And he loves to talk about this quadrant and how, you know, most people are living on this side, being an employee or starting a business, and it's only so far you can go. And then there's the big businesses, right, that are out there generating serious money, and then investors, right, who do things like buying property, getting in commercial real estate, and so forth. Now, he brings up the whole issue of, you know, is a house an asset? Is it really an asset? And this is because he gets into the discussion about cash flow, because he likes to define asset a little bit differently, where an asset is something that generates income. And a liability is something that depletes income. In other words, it's costing me. It causes money to leave me, right? So, and really, you know, there's the accounting, what we learn in school, and then there's what Robert Kiyosaki's talking about, because he's trying to teach us the principles of cash flow. So it is true that, again, even though this house might be worth $200,000 in equity, I only get this when? I only get this when I sell the property. When I sell the property, I get the $500,000 and it pays off the $300,000, and now I get this money, right? That's a worth to me. But while I'm not selling it, while I'm using it, this house, what? It has a mortgage. It's got repair. It's got taxes, right? It's got upgrades. Everything about it is taking money out of my life, right? And this is why Robert Kiyosaki says, stop looking at a house as an asset. It's a liability, because it's constantly taking money out of your, but if you have a rental property, then he'd like to talk about that as an asset, because this is something generating money, right? So the wealthy think about, how do I buy assets that create cash flow, right? And this is what we're talking about, cash flow. So this is a sense of a very important topic of how we think about wealth. And there's many ways to do this. I'm just using a simple example. Now, let's go back here to our application. All right. So we talked about cash flow and some of the principles there. Now, there's another word out here on the screen, right? And it's a word that says passive. You see that at the upper right? Now, you know, it's not often you're on a website or an app and you see a button called passive. I mean, passive normally means you're weak or something, or, you know, you're too passive. You're not tough enough. We're not talking about that. We're talking about something called passive income, okay? Now, this is beautiful here, whether you know it or not. We're deep into the mind of the wealthy right now. And it's important to learn these principles now, because you can think this way now. You can think about how to position yourself differently, because the way that we're taught in society is not really teaching us the right way to think about money. So here, and it's going to be a great tool in Money CEO, I can see here, now I'm going to get to that bar right at the top in a minute, passive to expense ratio in a minute. I'm going to explain that. It's so important, and it's all calculated for you. But on the left-hand side, you see 2 types of income. Your average normal monthly income, that's the income that comes from paychecks, contract work, and all of that. And then your average passive income. This is money you're making that is not tied to how you work every day, okay? And we'll go into that in a minute. So important. So at the bottom, you see a summary that green area is $4,900 of the income, which is 85%, almost 86%. The blue area, the passive income part, is $800 or 14% of my income. So that's looking at what percentage of my income is normal monthly income versus passive income. Very important. Then on the right-hand side, you see my average monthly expenses, which is pretty easy to understand. We all know what that's about, right? How we spend our money. So let's go back to this at the top and let's understand why it's at the top. The whole purpose of this tab is what's in that blue bar going across. Your passive to expense ratio. This is the thinking that I want my passive income to be able to cover my expenses. This is how the wealthy think. That I want money coming into my life that I don't work to do every day, that covers my life and how I live and my expenses. So even if I don't work, my passive income covers my expenses. This is the wealthy thinking. So here you can see this person is only at 17%, but that's great. I mean, just to have something going here, that is great. To even be in that game of passive income, that is very important. So I want you to understand that. Now, let's talk a little bit deeper about passive income, because I want you all to understand this is doable. This is something you can really do. Because you think about this, you say, well, I'll never start. I'm here, I'm there, I don't have this, I don't have that. I don't know where to start. I want to take you to an article that talks a little bit about passive income. So, all right, you should be able to see here. Now, I want to walk you through a few things here on my trusty Samsung Note here that I have my pen out. I don't want to, plug Samsung here, but I just want to talk about passive income. And I'm going to use this. So I want you to notice a few things here. So the Internal Revenue Service. So let's zoom in on this here, this upper paragraph. The Internal Revenue Service says passive income can come from two sources: rental property, like we talked about, or a business in which one does not actively participate, right? Such as being paid a book royalty or a stock dividend that you invested in. These are all passive income. Now, when people think about passive income, a lot of times they think about, it's when I get money for doing nothing, but that's not really true. What you notice in the paragraph below, you still work, but you just give the work up front. I want you to notice that little part of that sentence there. You still work, but you give the work up front. All right, so this is what we mean by passive income. Now, I want to go through, I think this article does a good job going through a few examples for you of passive income. There's 11 different ones. I won't go into all the detail, but these are passive incomes that you can do. One is selling informational products, something that you know and you record it and you put it online and people want to pay you for it. And every time they go to this, there's platforms like Udemy, Skillshare, or Coursera where you can post a course, and every time they look at that course, you get paid. You put the work in up front, you made the course, and then it's making money for you all the time. This is a great example of passive income. Rental income. We talked about that. So we thinking about a property or something to that extent. Rental income is another potential income, buying a property and renting it out. Affiliate marketing. Let me say that again, affiliate marketing. Can you come back to me for a minute? Listen, this is, you are a CEO, you success ambassadors out there. You should be jumping up and down. This is a passive income stream where you put the work in up front, and you can have continuous income coming into your life passively as an affiliate marketer. And again, some of the things we're going to be working on, and I can't get into right now, and we're going to be talking about, we're going to go to another level with our program, and Even Money CEO is going to help us make more money as well. So get prepared. This is another very important way to earn passive income. All right, let's go back. I just had to look at you real quick on that one. All right. You can invest in a high-yield CD. So a CD is more secure. It's secured by a bank, and there's some that have a high yield or interest rate that you can invest in. You invest the money once, and they're paying you an interest. That is a passive income, because every month they're adding money. Now, it's not, you're not going to just get rich quick or something, but it is passive income. All right. Here's another one. peer-to-peer lending, okay? So loaning money, and there's platforms out there that let you do that, like Prosper or Lending Club, where you can loan money and earn interest on that money. That you loan the money once, and then the money is keep coming back as they pay interest on that money. This is another way of creating passive income. Dividends are stocks. So if you know anything about stock, or you have a broker that you can talk to that can help you learn about what you might want to invest in. You know, if you're into that, this is another way, because you put your investment in the stock, and as that stock rises and you begin to see the value go higher than what you bought it for, then there's passive income being created. There's nothing you're doing, and the income is growing as the market grows. All right, another one is savings accounts, right? So you can actually put your money in a savings account that yields a certain interest rate. So there's some high interest, you know, not super high, but they're high, you know, higher than normal interest savings account. And that interest is a form of passive income. You're earning more income on that money. And then there's real estate investment trusts. These are really, really important in that this is just really where people have a special legal structure where a company really owns and manages real estate, and you can invest in that company that manages the real estate, and you can grow from the opportunities that they're getting involved in those real estate investments. Another good way to create passive income. A bond ladder, which is basically just a series of bonds, but bonds is another way you can invest in bonds. Then, look, you can rent out a room in your house. That's passive income. And you say, I'm going to rent my room out for so-and-so dollars. That room is just sitting there, and now you've created a passive income that is happening all the time, and it's coming back to you all the time. And this is, you know, there's other creative ways that you can do things like that. Advertise on your car. Some people do this, and they'll put something on their car, and people will pay them to do it, to drive around town with a decal on their car that they can take on and off. And that, again, is a passive income. These are just, you know, certain ideas. So this is, again, just an example. I just want you to see how many different ways. And this is just the beginning. There's so many other things you can get into, but don't think it always has to be some big business, some big real estate investment. There's a lot of ways. It's anything you can do that creates a cash flow of money coming in without more work. It can be some work up front. Might even be a little oversight, but the money is coming in without more effort. All right, let's go back here to our prototype. Now, for sake of time, I want you to notice that we have one area here called tax, okay? And before I show you this and what it has to do with wealth, let's go back to the banking area for a minute in the app. So here when we go to the banking area, I'm gonna go to Bank of America, and I'm gonna click on this Apple Store product here, and this is in the bank account. Look at the bottom part here. You see where it says mark as tax write-off. All right, do you see that down there? Mark as tax write-off. That is precisely on any transaction in Money CEO. You can mark it as a tax write-off. Why is this important? Because as you start learning more about wealth and you start learning more about the tax codes, depending on how you position your life, there are some things that you can use as a write-off. And these are things that the wealthy understand very well. They don't even have many things even in their name, right? They pay themselves other ways. And there's things that maybe we can talk about sometime and just all the creative things that are done. I'm still learning more of these ways that the wealthy use. And so anytime that there's an expense that you know you can attribute to something that you can write off, we allow you to mark that at any moment within Money CEO. Now, this is important because later, let's go back here. When we go back to the wealth area under tax, here's where it summarizes all of those things that you've been saying was a tax write-off, and it summarizes it for you. And you can see I've got about over $2,500 in tax write-offs so far this year. And you can keep track of this. So when it's time for you to actually prepare for your taxes, you can have this right here available, ready to go, something that you can use to let everyone know what you need to do. All right, or I should say, so that you can know how much you can potentially save. So again, if you want to, the wealthy think about their taxes and mostly about how not to pay them. And so this is something that you want to actually understand, and it's all right here in Money CEO. All right, well, I'm out of time, and I hope you enjoyed this. This was part 4 of Money CEO. We learned about wealth. We went deep into some of the topics. I took a little bit more time tonight because this is so important. And I want you to know, it has been such a pleasure walking through all of this with you, going over principles about Money CEO, going over principles about money. And now it's time to switch gears, because all of this is the foundation for something even more exciting. And our next show is the one you don't want to miss. It's called A New Frontier, Bursting into 2021. We're going to burst into 2021 with new opportunities, and it does involve us making more money. You don't want to miss our next show, because it truly is a new frontier. Thank you so much for joining me tonight. From now until then, get out there and let the whole world know that you are a CEO.